So we're entering 2024. Do you expect a lot of volatility in all those scenarios going forward, or do you see like a pretty obvious pathway ahead, or do you still bumpy ride ahead where a lot of things can happen?
Whenever we talk about the oil market, it just volatility is built in no matter what. If the issues are not the political events, the political events basically have been there forever. So this is not the big issue. The big issue right now, and some people raise this issue, is that if there are problems in the Red Sea and around the Suez Canal, it is because of the military buildup. It's not because of the attacks. Those attacks been there before. And as you remember, there were even warships that been attacked by the Houthis historically. Strangely enough, the United States did not reimpose the classification of a terrorist group on the Houthis, despite everything that happened. Let us remember that President Trump classified the Houthis as a terrorist group, but the Biden administration removed that. Yet, even after the attack, they did not go back and relabel it as a terrorist group. Of course, some experts believe that there is a reason for it, because if they label it as a terrorist group, they cannot negotiate with it because that's forbidden by law. But still, we are talking about major attacks here. The shipping industry is in total panic because of it, and yet they did not classify it as a terrorist group. Talking about 2024 and the oil market. Right now, every time we talk about the oil market, we have to talk about the LNG too, because in all those waterways, we have the oil tankers and we have the LNG tankers. And it is, until now, we did not see any attacks on oil tankers or LNG tankers. And it's not expected to happen simply because probably the Houthis realize that attacking an oil tanker or an LNG tanker will change the whole equation and will turn the world against them, because any spill, any major problem in the waters is going to be covered in all the media, and many global organizations and many countries will turn against them if we reach that point. However, when we look at 2024, earlier in 2023, we were bullish on the fourth quarter of 2023 and 2024. But things changed drastically in the second half of 2023. We've seen a slowdown in economic growth in several places, including Europe, China, and the United States. And with that slow growth, basically, we ended up with lower oil demand than expected. That led to build up in inventories, especially in China, while we were expecting a decline. So between what we were expecting and the current level, we have about 70 million barrels that's been built up that was not counted for. We have a similar problem in the United States, and here I have a comment on oil demand in the United States. If you look at the EIA numbers, we have seen an increase in oil demand in the first 10 months of the year over 2022. So there is an increase, but that increase is within the margin of error, given the adjustment numbers of the EIA. And for those who are familiar with the term, we have a serious problem with the EIA numbers, because when they estimate supply and they estimate demand, they should equal each other. And when they don't, they just throw the difference in between to make them equal. And that difference was huge. That difference is still larger than the increase in demand today. And one of the problems we have is that we might end up with double counting. And if we go down this path, we might end up showing that US oil demand declined. And here is why. Because we have something in the oil business called natural gas liquids. Those natural gas liquids can be used as intermediate goods or final goods. So those are classified as part of the demand. But because of the massive increase in US crude exports, what we've seen basically is we've seen a group called blenders. These are not even refiners. They take the heavier crude, they take the natural gas liquids, they mix them, and they end up with a crude that is classified as a crude and part of the exports. So that is counted, but the problem now is being counted twice. It's being counted as liquids and then counted again as crude. And that gives you the impression that probably the oil demand numbers in the United States are overestimated. And there are other evidence to support this idea that probably we did not have any growth in the United States demand. All of this is casting a shadow on 2024. So as I mentioned, we're bullish on 2024. Now we are not. What we see today probably will continue throughout the year, absent any political events, and probably we might end up with lower volatility. Looking back at 2023, one of the main characteristics of 2023 relative to other years is that it is a year where all forecasts have failed. We usually always have all kinds of forecasts, and some of them will fail, some of them will not. But 2023 was the year when every forecast failed, including ours. So we were doing, our forecast basically was literally spot on so many things, and on the first 3 quarters of the year. And then we reached the 4th quarter, everything collapsed. And we were awfully wrong on the 4th quarter, although we've been doing very well on the first 3 quarters. What went wrong for most forecasts, not for us, for most forecasts, that first, they assumed that sanctions are going to work, sanctions on Russia are going to work, and that's going to lead to a substantial decrease in Russian production. We came in last year, at the end of last year, and we said, no way, you need to study sanctions. Sanctions always fail. Russians basically will take a page from the Iranian book and make 1,000 books out of it. And one of the ironies is that we said 1,000 books, we just said it as a sort of exaggeration, and we ended up with 1,000 oil tankers being bought by the Russians. That was just kind of a strange coincidence. But the idea here is we estimated that Russian oil production will decline by 600,000. That prediction we made at the end of 2022. Guess what? The decline was 550. So we were spot on this decline, while the others were talking about a decline of 3 to 5 million barrels. So that was one of the reasons for the failure. The other failure was they assumed that the opening of China will lead to immediate explosion in oil demand. And we said, no way, this is going to show up later in the year. Of course, even that did not show up. But that was one of the sources of the mistakes. We've been hearing in the media a lot and from some analysts that they are surprised that US oil production increased and that contributed to lower prices. That's nonsense. If you go back to several forecasts at the end of 2022, including that of OPEC and ours and others, the forecast of 1.1, 1.2 million barrels a day increase was built in and was expected. And we've been saying this so many times in spaces, podcasts, TV interviews, etc., that the US oil production and US shale in particular will continue to increase despite the decrease in rig count. Those who tied the rig count to production proved that they don't know anything about shale. That's really a big mistake that happened in 2023. The other issue that we've seen is a mistake from OPEC. Based on OPEC numbers, OPEC Plus should increase production, but they've been cutting production since 2022, October 2022. And yet OPEC insists that the demand is very strong. Well, one of the problems we have is that demand is one thing, consumption is another, because a country can increase its demand and take that oil and store it and put it in inventories instead of consuming it. But even with that, one of the reasons why our forecast for the fourth quarter failed, first, the decline in, or the economic growth in China was way lower than expected. But what we did not count for and we did not know about is that the government limited the export quota and refused to increase them. And that was something we did not count for, because if they did not limit the quota, then Chinese demand will be higher and they can export more products to Europe and other places.